Hello, welcome to another episode of Money Ministry. I'm your host, Craig Mack, and today we're going to continue our series of technical analysis and going over the MACD indicator in this segment. If you are new to the channel, welcome. Again, I'm Craig Mack. This content is about understanding how to invest in the stock market, especially designed for beginners. If you are been rocking with me since the very beginning, welcome back. Don't forget to hit the like and subscribe button. For those of you who are new to this channel, please, highly recommend you go back through the playlist and look at the previous episodes because the episodes build on one another. I pick up where I left off from the last segment, and so that way you are it's better for you to understand the content that's being presented. Right now, I'm going to establish my credibility with you. If you're new, I'm going to show you my performance, just to give you an idea of my knowledge of the market and how it performs. What you're looking at right now is my year to date since the beginning of January. I've got a return of 4.99, still better than what you get in a savings account. But you see, I've outperformed the NASDAQ and the S&P combined. Okay, let's go for the last 3 months, 4% roughly. Um, Again, I'm still outperforming the NASDAQ and the S&P. Go to 1 year, I got a 66.33% return. And again, I'm outperforming the NASDAQ and S&P, and then going all the way back to when I established my brokerage account with Schwab. I've got 168% return, and again, I'm doing better than the S&P and the Nasdaq combined. So that's been my performance so far. I'm off to a little bit of a rough start, just with just about everybody is. I don't share my portfolio because that's not the point of you to copy and invest in what I'm investing in. What I'm trying to do with this content is to teach you how to seek out your investment and set up your portfolios, and you identify your own stocks. This is where I go into the legalese. I am not a financial advisor. Okay, I'm not recommending any stocks to you. Uh, I highly recommend if you're still uncomfortable, you can always get advice from a licensed financial planner. So to take care of whatever your situation is, it's a unique situation. I don't charge for special classes or one-on-one training. I don't believe in doing that for people that are going living paycheck to paycheck, and I don't believe in creating another bill for them in order for them to learn. So I offer this information free of charge, and um, and that's it. So with that, let's move on to the presentation. Today we're going to talk about the MACD. Okay, let's go to the beginning. Understand the MACD indicator. Okay, it's a tool for the stock market and technical analysis. MACD is considered one of the most reliable indicators. You should not just look at the MACD by itself. When you're looking at stocks or trying to determine whether or not you're going to buy or sell or entry point, you should not just rely on that. You use it along with the other tools that I've discussed with you, and there's some other tools that I'm going to go through as well in this series of technical analysis. Okay, the MACD was developed in 1970. Oh, before I go any further, I do these slides so that you can take notes, you can pause, you can read through them yourself. I'm not going to lead the slide. I'm not going to read every word for word. You can read. So I'm just going to summarize what the slide is talking about and summarize it in a way, hopefully, that is a clear way for you to understand and grasp the concept behind it. Okay. So Gerald Appel created the MACD and remains one of the most trusted technical indicators, which I mentioned before. It's a momentum oscillator. So what that means is that it is a way for you to gauge the momentum or direction that the stock or index is going. All right. It's a way for you to try to time the market, which is I don't necessarily recommend trying to time it. I believe in looking at which direction it's going and then making your decision based on the price that it's at that you're comfortable with purchasing the stock at. Okay, let's go to the next one. Core idea behind the MACD. It measures the relationship between two exponential moving averages, the 12-day and the 26-day. And over here to the far right here, you see here's this is how it's calculated. All right, MACD line. It's the main indicator. It's usually blue when you're going through your brokerage account. The tools that they use is usually the blue line on the MACD. Your signal line is usually the yellow line. Okay. And the vertical bars that are associated with that particular indicator, that gives you an idea of the momentum. Um, the longer the bars, if they continue to get longer and longer with each trading day, that means momentum is picking up. If they're getting smaller and smaller, that means that depending on what direction the market is going in, if it's going down and the bars are getting bigger and bigger, that means that the bearish momentum is increasing. If it is sloping upward and getting smaller and smaller, that means that the bearish momentum is taking place and continuing. There you go. Interpret the MACD crossovers. Bullish signal. The MACD line crosses above the signal line, not meaning the yellow line. The blue line crosses the yellow line, indicating potential buying opportunity. It is a very strong signal if the blue line crosses the yellow line and they're both below the zero line. That means that is a strong bullish momentum shift. Okay, the opposite is true for the bearish signal. If the MACD line crosses below the signal line, that means a potential selling opportunity. It means the market's about to go down, price is about to go down. This is especially true and especially a strong indicator if this happens below the zero line. What do they mean by the zero line, Craig? Glad you asked. I'll show you here using the S&P. See the S&P here? This is the MACD here, okay? So what we're talking about right here, when the blue line crossed the yellow line, okay? That means that there was an increase that's bullish and there's increase. And if you look up top here, you see that the uptrend confirmed it, okay? Here's the cross right here. So before it started, the MACD was showing you, hey, you might want to start buying because the prices are about to go up. And so sure enough, they went up, okay? Now, here, it crossed above the signal line, across below the signal line, and it trended downward. And if you look up top here, that correlates to the same time period, you saw that the market took a little bit of a dip, okay? But it kept going. You see the bars here. Let me increase this so you can see it better. And the bars, so here's where it crossed. Here's where your bearish signal is, saying, hey, the market's about to go down. Sure enough, it did. And you see the bars here, they got longer and longer and longer, meaning that it increased in the bearish momentum, in the bearish direction. Okay. Then the bars started getting smaller, which is a bullish indicator. The first indication that's bullish, but to confirm that, you had a cross below the signal line. Here's the zero line right here. The blue line, the vertical line is the horizontal line is the signal line. Your MACD line, the blue line, crossed the gold line. And sure enough, if you look up top there, the market turned positive or bullish. Okay. Again, you had another cross here correlated to a dip, and then it crossed back up again. And it's been basically going sideways ever since. Okay. So that is what that particular chart was covering, or that slide was covering. And let's move on. Interpreting the crossover. Just went over that. Above the zero line, the MACD crosses above zero. Short-term momentum surpasses long-term momentum, indicating bullish trend. Below means it's a bearish trend. Okay. Divergence, powerful reversal signal. Price makes lower lows while MACD makes higher lows. This is just weakening of the downward trend. Okay. Same the opposite is true for bearish diversion. Price makes higher highs while the MACD makes lower lows. This indicates a weakening in the upward momentum. Remember, this is a momentum indicator. The MACD is a momentum indicator. Using the histogram, those are the bars that I was referring to. Yeah, go back and show you. That's these bars here. This is the histogram. Those are the bars that I was referring to. So spread it out. Okay, so let's go back. Growing bars means an increase in strengthening momentum. That could be bullish or bearish. Shrinking bars, decreasing in size, weakening momentum, and possible trend change. Okay, so if things were going, if those bars were red, like here, and it kept increasing, that's bearish, right? It's below the signal line, and so that's bearish, right? Continue. Then they started getting smaller. That means that it's bullish. It's turning bullish. It peaked, and now it's turning bullish. So it's turning and changing direction. And they start shrinking after they were going one direction, and they start shrinking and going the other direction. That's an indication that there's a change in the direction of the market or the index. Okay. Crossing the zero line. When the histogram crosses the zero line, it aligns perfectly with the MACD and signal line crossovers, providing confirmation. All right. One more after this. Limitations and best practice. The MACD is a lagging indicator. Okay. It shows the previous, it goes all the way up to the previous day trading day. Okay, so like the MACD that you looked at today, that's the market close. So it's only showing from the 23rd. Today is the 24th. So it's showing the 23rd. Okay, as of the 23rd. Tomorrow it'll show the 24th on the 25th. Okay. What you have to look out for though is when it whipsaws, it goes back and forth during sideways and choppy markets. Risk management, always consider market context. Look at your overall market. Don't just look at the MACD for signals. You can use it to try to confirm what you think your thesis is for which way you think the market or particular stock you're looking at is going. But you should use it with the MACD along with your other indicators to confirm your hypothesis. All right, summary. Why use the MACD? Determines trend, can identify exit and entry points, and you can get a visual assessment using the histogram, the bars. Okay, it's an essential tool. Again, it's been used for decades amongst traders, and it is considered to be one of the most reliable technical indicators. Okay, so that does it for this particular session. Remember, the God is still in control. He is on the throne. And I know times are tough right now with the war and everything going on, but you got to keep the faith and keep the faith and don't give up. Don't give in to any depression or anything like that. Stay positive. This is a temporary situation. At some point, this is going to change and there's going to be a brighter day. So with that, I'll leave you. God bless you. God keep you. And I hope that you enjoy the rest of your day.